Well, hello, traders and investors. I'm Ellie Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, and that means each time we're asking ourselves what happened today, what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. As far as what happened, it was another push, a push to the upside, some follow through off of Yellen's, we'll keep the spigots open. And that push, it kind of stretched. The Russell was up big yesterday, so kind of stretched, but did manage upside, follow through 0.5% more on most of the indexes. You actually had the DAX allowing this to take place, in my opinion, because you had the dollar weak again today. That put the euro up. But the euro got up and fell today, so we may see some relief. Maybe this was partly off of that. And if we go over and see the other strong index, you can see what kind of grief they're getting in Japan as a result of the weaker dollar, stronger yen. I suspect you're going to see the same thing happen here in the European markets. Bonds trade down, oil trades down, at least the USO did. The WTI was about flat, and we saw gold trade down 1.5% as well. So some larger moves outside of the follow through that we saw there on the indexes. Let's take a look at the actual market here. And as we take a look at it, what we're going to see is we're going to see that follow through, right? We said last night the S&P 500 was the only one that had not gotten to a new high. Well, of course, it does tonight. It follows through just like the rest of them. Gets over this little area, right? Pops up there, gets a new high. And this march higher, even though the angle of ascent is not what you would like to see, you would like to see it more like this. So far, this market is unwilling to give it up. I do expect you're going to see this thing either flatten out and go sideways, or you're going to see a pullback, one of the two, right, to make this angle more palatable on a longer term basis. If you look at the NASDAQ, you actually got the pop up and then another one of those black dojis where it just has difficulty hanging up there. If we look at the NDX, it's the same thing. And it looks like I don't have my ending numbers here, in terms of the volumes. I guess it's not that important. We'll see if we have them by the end of the show. Because we really weren't testing anything at the highs yet. 45.22 is this one. You got up to 45.18. So we don't really have anything to compare to other than the shape of the curve, so to speak, in terms of the quote, and no kind of over-unders or anything. Now, if you remember at the beginning of the week on Sunday, I was talking about the fact that if we pull over the weekly chart, that you had two-bar reversals, and those should trade sideways to down on the next bar. And so the two-bar reversals were the last two bars. So far, though, what you actually have coming into Friday is you actually have them trading slightly higher. Now, if Friday turns out to trade lower, right, then you would be in there in a sideways move. So it really kind of comes down to tomorrow whether that two-bar reversal is actually going to cause that. Probabilities are reasonably high on it when it's an extended move, and these have been extended. So I wouldn't be surprised to see it actually trade down tomorrow as a result of that. But right now, on the daily signals, you don't have anything telling you that. Let's go look at the currencies because that's really where the action is now. And if we look at, let me grab it here. If we look at the dollar first, actually let's just look at the FXE, which is the euro first, because the euro actually did a failure at the high. So the swing point high was here. So it tested into it. That was 110.82. A volume on that, 695. And because this is an ETF and the Forex is really where all the volume is, it's hard to get great reads on these volumes, but you did go over it, have less volume, trade back under it, close under it. In neoclassical terms, that's a test failure of a swing point, in this case a swing point high. So you go over it, you can't stay over it, right? You come back underneath it, you have less volume. That is the classical definition of from a neoclassical view, that's the definition of a test failure at the highs. which says that, hey, you don't, I mean, think about what it tells you. It tells you that people are unwilling to buy at higher and higher price points. And when they're unwilling to buy, they may try again, but in this case, they don't have the volume showing that. But again, we don't have the best volume reads on the ETFs. But if they're unable to get over that high, then you're going to see them probe the downside. Now, if we look over at the dollar, it wasn't the same story though, so that's why it gives me some pause, because the dollar actually tests a swing point low and test it with more volume. So in other words, you're getting the opposite case over here where the dollar is saying, hey, we're pushing down here with volume, right? And even though we couldn't get under it and break it, we tested it with more volume. That says we're probably going to try again. So I wouldn't be surprised to see those currencies, both of those currencies, try one more time. If we look over at some of the other beneficiaries of all this excitement, junk bonds, 31 up to 34.60, so you've made a 10% move on bonds in 6 weeks. Again, not sustainable, folks. These are not sustainable moves. You're going to see them come in. I mean, that kind of a move is not sustainable. It's getting more sustainable here. Really sustainable would be out here somewhere. So we're probably going to see some more backing and filling as a result of these moves we've already made. If we look at the long bonds actually can't get going. No impetus there. And if we go look at the oil market, as I said at the top of the show, the WTI traded about flat today. But the thing that you can see here on the USO, the ETF, was exactly what happened in the WTI, and that is the West Texas Intermediate got up, right? And then inventory numbers came out about an hour into trading. They tried to rally them off those inventory numbers, but they gave it up, right, and finished lower. And that was a failure. And if you really want to do, say, classical stuff here, if you look at the WTI, just as you're looking at this USO contract, they all look the same. That's a head and shoulders type top trying to form. And if you're really looking at the WTI, you actually have a ledge that is formed right in this area, and this little bar that you see that's underneath it actually was on the line, on the actual contract, this bar here. So you've got a ledge that is formed. You're sitting right at the edge of the ledge, right? And that's getting ready to do one of those ABCD structures to the downside. So my suspicion here is what you're going to see is you're going to see this thing pop up, right? Come back up into this area, and then trade back down to the other side. So, ABCD structures here, A, B, C, and then the D would be down here somewhere. So that's the way that looks on the oil. If the oil market still is driving the equity markets, and it's been such a big factor in the small caps, then we would expect the equities to continue to be tied at the hip, so to speak, and try to trade down off of that as well. We'll see if there is a difference in these markets now compared to what it has been. We saw divergence yesterday, and we saw it again today with respect to the equity markets moving higher, but oil not doing so. If that has divorced itself, then maybe it doesn't matter. But I suspect that if oil really starts to drop, in other words, oil made a huge rally. I mean, let's just focus on this for a second more. You went, and I'm using the USO, but you've essentially got the same percentages almost. You've got almost a 50% rally in 6 weeks. And I know in the context of the larger move here, it's nothing, because if you come over here, you had a decline from 2050 to 7, so you had an 80% decline or something, or 70%. So you get a 50% rally. It doesn't really mean much in the context of the decline. But if this thing really is trying to roll over and is going to come back and test, the decline that's going to take place here in terms of percentages is going to be large. And I don't think the market's going to be able to ignore that. And so that, to me, is going to be an interesting tell when this oil market breaks this little ledge and tries to head back down. And We actually went short the oil market at the highs today. So that was members in the trading room, a nice trade that we had set up there. And told them exactly how to look at it on that pop-up on the inventory numbers. And it gave us almost exactly what we wanted, was able to get into it and trade it to the downside. And when you're trading a 2-to-1, we were trading the SCO, you get a pretty good pop. You know, oil gave up 4%, the SCO picked up 8% on the day. That's where we're coming in. Tomorrow you got the employment numbers. So far, this market, once more, is not giving us anything on a daily that says, hey, we're going to pull back. On the weekly, you still have that 2-bar reversal with one more day to go that says you should trade sideways to down. Certainly looks like sideways is about the best you're going to get this week, probably if you're a bear. So that employment number, in my estimation, is going to be what moves this market tomorrow and potentially sets up something to the downside. Tomorrow also happens to be, that's on Friday, the employment number, I'm sorry. Tomorrow happens to be the end of the month. We get the PMI numbers from a number of countries overnight. The employment numbers on the 1st, which would be potentially a setup to get some downside. So really there's 2 more days. I guess I'm losing track of time here. Maybe everything just kind of bleed together when the market just goes up and up and up. We're going to leave it at that. I'll be with you again tomorrow. We'll do a preview of that employment number once we see how tomorrow trades. I suspect tomorrow is going to trade sideways, potentially back to the downside a little bit given those candles that we saw today. Have yourself a great night, and I'll see you next time. Good night.